this event, we'll be having a panel discussion all about securing open finance. And we've brought in two experts from the world of open banking and API security to join us today. We have Eyal Sivan from Ozone API and Daniel Lindau from Curity. And
Hi.
why are we doing this event today? Well, I think securing open finance is a pretty important topic for us to sink our teeth into right now, given that financial data is really sensitive and hard to secure. Open finance essentially runs on a lot of APIs at its core, and we need to make sure that access control to these services is super airtight. At the same time, we're seeing a lot of new API attacks rising, especially with the emergence of AI. New standards like the financial grade API profile are tough to grasp, but critical for securing these services. We're also seeing new open banking regulations like 1033 emerge, shaking things up into new geographies. And the existing banks need to open up, reinvent themselves to really stay competitive and relevant. And a lot of this hinges on APIs. But it doesn't really stop with financial institutions. Having high-grade security is relevant for a lot of industries, from fintech to insurtech, even automotive relies on financial-grade security for APIs, if you will. So yeah, we thought it'd be great to have a panel discussion, cover some of these emerging topics. I'll first lead with some questions, but please, as we go along, feel free to type in any questions you have into the Q&A, and we'll take them on a little later in the event. So yeah, first off, let's introduce who we have today. Eyal, do you want to start? Maybe you could briefly introduce yourself, your background, and what you're currently working on as it relates to open finance.
Sure. Thanks, Bill. First, great to be here back with my friends at Nordic APIs. I have been part of the Nordic APIs community since, 6 years ago when I worked for a large Canadian bank, CIBC, as part of the enterprise architecture team in charge of the API strategy. And I got on stage at the Nordic APIs Platform Summit and talked about APIs and microservices. And it was actually at a Nordic APIs event in Stockholm where I first learned about open banking. I met Gunnar Berger, who at the time was the head of open banking for Nordea, and he told me all about PSD2. I fell in love with the whole idea. I ultimately decided to leave my role at the bank of 15 years and decided to really leap into this open banking space. I ultimately created the brand Mr. Open Banking. So a lot of folks in the global open banking community know me by the name Mr. Open Banking. I started a podcast under that name. We just finished at the end of last year our 5th season. I'm very proud to say we now have over 100,000 listeners all over the world. And I've had the pleasure of interviewing some of the leaders and visionaries behind open banking in absolutely every region in every continent. So it's been a wonderful journey. In terms of my day job, so to speak, when I left the bank, I went to work for Axway, a well-known API management provider, where I started the open banking practice, created an open banking product, which we launched in Brazil. From there, I went to Radium, where I spent about a year working with the world's leading trust framework provider. And today, I'm the general manager of North America for Ozone API, one of the leading open banking solution providers who helped build open banking in the UK, have since created a platform to help banks and data providers support open banking in every standard in the world. And I'm trying to bring that magic to North America just in time for the regulations. Great to be here.
Yeah, it's great to have you back. It's fantastic having OG Mr. Open Banking back with us again. It's really cool how you stumbled upon this through Nordic APIs and then have grown yourself into this a leader really in this space. So I can't think of any person best to feature on this topic than yourself. So thanks for being here.
My
Daniel,
pleasure.
why don't you share a little bit about yourself?
Yeah, I'm Daniel. I'm heading up the professional services team at Curity. So we work with our customers in implementing Curity, but we also teach our customers and others on how to best implement the different standards that are necessary when building secure platforms. So I've been a part of Curity for I'm coming in for 10 years, I think. So and I've been showing up at Nordic API since the start as well. So been around here for some while, and glad to be back speaking about the fun stuff here.
Yeah, always a pleasure. A lot of really smart insights from you and the Curity team always here. So let's start pretty basically. I'd love to get both of your opinions on the current state of open finance and how do you see things evolving globally, especially in recent years. Hey, I'll kick this one over to you first.
Yeah, so open banking is a fascinating thing in that it has indeed become a global movement. Today, it's active in some form in over 90 jurisdictions, which is sort of crazy. I mean, that number kept ticking up and up and up, and now we're at over 90. So that this is absolutely everywhere on every continent. But every place where this happens brings their own flavor, and they really have a different approach that's all wrapped up in the culture of the country, the relationship that people have to their banks, the state of the financial system, and the goals that open banking is trying to achieve, the problems, if you like, that it's trying to solve. So to understand what's happening, you kind of have to understand where that country or region is. Even within an individual region, you'll see differences in countries within that region and how they approach it. This is true if you look at, for example, the way Germany does it versus the way France does it versus the way Italy does it, even though they're all under PSD2, and differences in the way, say, Canada and the US do it, even though they're both in North America. So it really is a little different everywhere, but there's no question that it is on the march. You see this happening absolutely everywhere in some form. So quick whirlwind tour. Open banking started with PSD2, the Payment Services Directive 2 in Europe. I think we just celebrated our seventh. The global open banking community, we celebrated the seventh anniversary of PSD2. Not without its challenges. It is sure to come with challenges if you're first out of the gate, and it has led to a degree of balkanization and inconsistent implementations and inconsistent standards. But the good news is that the EU is well aware of these challenges and is trying to address them with the next round of regulations that are still kind of in the pipe. So you had PSD2. A bunch of standards came out of that, like STET and Polish, but by far the one that emerged as the dominant was the Berlin Group standard. Keep me honest here, I think it's X2SA is the nerdy official name of the spec. And it has sort of emerged as the dominant standard, but because it's still a directive, a PSD, the D is directive, the implementations aren't very consistent. So what you see Europe doing now is moving towards PSD3, as well as some complementary regulations, which are intended to clean things up, if you like. One of those is PSD3 itself, which is going to tighten the controls around payments and create a more prescriptive API specification around payment initiation and around data sharing. FIDA, so the Financial Data Access Act, which is trying to create a kind of separation between the payment stuff and the data sharing stuff, and be a little more consistent on the data sharing stuff and more explicit around data rights and so on, and create a foundation for potentially extending that data access right beyond financial data, even though the F in FIDA, some call it FIDA, is still financial. And then you've got PSR, which is the payment service regulation, which acts as a bit of an umbrella, at least for the payment side, to bring together all the different standards. And it's significant that it's an R and not a D, because a D directive means the countries are still free to kind of do whatever they want. Whereas the R says, no, all the countries in the EU have to follow the same regulation. So PSR is the way to kind of unify the standards. PSD3 cleans up some of the specifications, and FIDA really leans into the data access and data rights. So that's what's going on in Europe. But all those things are still pretty drafty. They're not official yet. We're hoping to see some finalization of those this year in 2025.
Yeah.
Meanwhile, in the UK, you've got open banking. What was once it's called UK Open Banking as a blanket term. The organization driving it was once called the OBIE, the Open Banking Implementation Entity. That has since changed its name to Open Banking Limited and become a little less regulatory driven, a little more private. They've gone through some changes through a future entity that was created to kind of help them find their way. And now they have completed their plan. In 2024, they released a version, I hope I got this right, 6 of their specification, which is a major version upgrade. Their roadmap is done, and they're really leaning into some of the supportive legislation that's happening in the UK, specifically the Payments Act, and the which mandates variable recurring payments to be widely adopted, which is a really nice use case, as well as the Smart Data Act, which again leans into um, data sharing, data access rights, and this ability to share consented data in a general way. So that's a great pivot to Australia, the original region who said this is about more than just financial data and leaned into the idea of a generalized data right. So right out of the gate, they didn't do an open banking act. They did a consumer data right act, which was a cross economy initiative from the beginning. Very ambitious, but they, by all accounts, oversteered a little bit on the regulation. They oversteered a little bit on how prescriptive they were. They started tearing down some stuff that was already in place that worked. So now they're taking a breath, taking a step back, and having a lot of discussions about the future of CDR and what exactly they want to do, and making sure that the next round of it kind of works, but learning from overstepping on that side. Still with the same idea that it should be a generalized data right across the economy, and trying to preserve that base. Probably the most heroic story is Brazil, who went from, but really just a plan, to one of the most modern, most successful open banking ecosystems in the world in the space of a year. Since then, it has just grown hand over fist. They now have open insurance. They have open investments. They have very successfully integrated their open banking regime with PIX. The PIX numbers are absolutely astounding. They're on track to do like $1 billion a day, or some number like that. They are absolutely crushing the credit card volumes in the region. So it's really the one that most successfully integrated an open banking regime with a real-time payment rail. So Brazil has done very, very well. Meanwhile, the sort of sleeper champion of all this, I would say, is India, who took a route that was very different than others, starting with a digital ID initiative around Aadhaar, adding real-time payments in the form of UPI, and then only later, through Sahameti, adding data sharing capabilities, which they now continue to expand, not just into open finance and open data as the Australians understand it, but even into things like open commerce. And you're starting to see rumblings of open search. So India, in many ways, is very far ahead of this. Meanwhile, Southeast Asia continues on their incredibly strong API game, builds it in their own special, very practical way, largely driven by initiatives out of Singapore. The MAS are famous for being very good at this stuff and cooperating with the market. And the Gulf has joined the party recently. So you see nation scale initiatives coming out of Saudi Arabia and the UAE. Very proud to say Ozone is in the center of both of those initiatives. And it's spreading. So Jordan, Oman, Egypt, it's really spreading across the Middle East. Israel has an initiative that is actually quite advanced, again, quietly moving along, very advanced. And then you have North America. I mentioned Brazil. I should talk a little about the spread in South America. So Uruguay, Paraguay have initiatives in motion. You see Chile leaning into this. As we move north on the Western Hemisphere, Mexico now with their new president is starting to breathe new life into the fintech law that they enacted all the way back in 2018 with a mind to reinvigorate open banking efforts. And part of that is being driven by, finally, the US and Canada joining the party in earnest. You have seen in the US, this is an area I'm very much involved in, Section 1033 becoming, also known as the Personal Financial Data Rights Act, now becoming official legislation at the end of last year. The final version was published by the CFPB. along with dates for compliance, tiers for the banks who have to comply by the dates are actually very easy to remember. It's 5 tiers that have to comply on April 1st. Hold your April Fool's jokes on April 2021st, 2026, 27, 28, 29, and 30. The bank's getting gradually smaller as they go. And I'm happy to talk about the various things they have to do and data they have to share. Canada, after talking about this for almost a decade, finally released their own regulation called the consumer-driven banking, and that is now in a little bit of a limbo because Canada is going through a bit of a political upheaval. But the first version of the act did receive royal assent at the beginning of last year. It's only about a dozen pages, but it does lay a foundation. It designates a governing body. And the second tranche of that, as part of the Budget Implementation Act Part 2, within that you have the Consumer-Driven Banking Act. That has been released, but because of the political turmoil, it hasn't received royal assent yet. And we'll see where that goes. So that's a bit of the global tour. Open banking continues to progress everywhere. And, as Mr. Open Banking, I couldn't be more happy about that.
Yeah, at the start of the call, you mentioned Nordea and Gunnar Berger sharing that the original case study at Nordic APIs back in 2016 or 2017. That was very eye-opening for me because I remember him mentioning, yeah, we had to do this, and we got 500 signups on day one.
Yeah.
I think we both
Yeah.
knew at this time that this would be a significant wave, and what you just outlined totally proves that it's happened. It's become a global phenomenon. It's phenomenal to see this. I'm curious, like, do all regulations require a standard format to enable openness at a technical level? We run this
Yeah.
API blog, this API community, so I'm like waiting to hear that 3-letter acronym. Daniel, do you want to take that? Maybe what you're noticing in terms of openness and how that's being achieved at a technical level?
So I do not have the same grasp of the global as Eyal, but so what we've seen with like PEC2 and open banking in Brazil is that it differs quite a lot. So
Right.
PEC2 doesn't really say you have to have these APIs, but you have to make a certain amount of data available, a certain amount of operations available for your customers or for your citizens. So that drives different um, it drives the solutions in different directions. So we had the Berlin group creating a API spec that you could use for your APIs and have them make your implementations based on it, but nothing was really mandated that you have to do it like this. And you had the UK group doing something similar, but with a bit of a twist in between.
Right.
But there were also a lot of different implementations serving the same data, but inventing their own APIs because all they had to do was to provide the APIs. And on the other hand, we have Brazil that started out with something similar, that they had to give out like a payment and account API, but walk that line together with the OpenID Foundation and created, like, the legislation is you have to follow these specs. You have to be certified through OpenID Foundation or a subsidiary of it to be able to partake in this open banking. And if you're a bank, you have to. So there's different ways of solving it all around the globe, I would say. But there's also, I would say that after PEC2, the things that come out later tends to drive to the Brazil way rather than having free-form APIs for everyone.
Yeah, to Daniel's point,
Sure.
what you see is this lean into being more prescriptive. I mentioned that the Australians maybe kind of oversteered, but what the UK quickly learned from Europe was, geez, we should be prescriptive about some of this stuff because otherwise you just end up with this fragmentation. And let me take a step back because you mentioned the famous 3-letter acronym, right? APIs. That was certainly my whole world before I ever discovered open banking. I'm sure for many of the people on this call, for Daniel, for you, Bill, that's the case, right? APIs, the glue that binds. And that is very much at the heart of open banking, right? There's some folks who go, well, open banking is about consent-driven data sharing. That's absolutely true. But here's the thing. Consent-driven data sharing existed long before open banking existed. Maybe not as prominently in Europe, but it absolutely existed in the US for almost 20 years, like since the 90s, since the original Yodlee and Mint and stuff like that. But it was done in really poor ways that were based on proprietary connectivity, sometimes not even API based, just screen scraping. What open banking introduced that was a game changer from a technologist's perspective was this idea of standardization, right? Let's be clear. I mean, yes, consent-driven data sharing, yes, regulation, but what got me excited about it, what got all the nerds out there excited about it, was that the whole industry was moving towards this idea that APIs for financial services should be based on common, open, shared standards, so that no matter which bank you're talking to, big bank, small bank, credit union, fintech, the APIs worked the same way. And that is huge. I mean, that changes the whole economics of how you create APIs, how you connect to APIs, how you manage them, how you create technology solutions that address that market. That was the significant change. And I want to also stress that that shift towards standardization, while it started in Europe with a regulatory move, which in itself is fascinating, it is happening through combinations of market forces and regulatory forces. It is a misunderstanding of open banking to think it is exclusively regulatory driven, regulatory led, I should say. It is just as much market driven. And the regions that get it right find the right balance of how those two forces work together. Whether it's more regulatory led or more market driven, the destination is the same: common, open, shared standards for APIs that enable consent driven data sharing.
Can we talk a little bit more about what precisely is the sort of data that is being mandated be exposed? You know, I want to get a better handle of what kind of sensitive data we're talking about from a consumer point of view, and also get a better handle of, you know, the third-party providers involved in open finance and how they're using this data, because I feel like that might set a better picture for, you know, what are the security implications of all this. Daniel, do you want to kick that one off?
Yeah, sure. So Eyal can expand on this, but the main data that's being driven about this is account information and payment operations. So third-party apps can bring some of the banking functionality into their own apps and provide the functionality of managing your accounts across different banks, if that's an app that makes sense. And so the sensitive information is just it's hard to speak English today. The money I have on my bank, the number on my account is there. So that's pretty sensitive. But also I can issue payments to different types of stores and whatnot just through these APIs. So of course this is a very sensitive operation that can't be taken lightly. But I know in PC3 these are things that are being expanded on, and also in other parts of the world where they mandate the sharing of other types of information, and also in insurance, open insurance. There's also other types of information that comes out. So, but it's all about the data that banks hold of you, the finance institutes holds about you, that are being shared and being made available.
Yep. Yeah. In a nutshell, Daniel's absolutely right. You got accounts, you got transactions, you got a little bit of KYC, so some light information about a customer. That leans into digital ID and broader stuff for KYC, but open banking proper usually includes some light KYC, terms and conditions around the products. Some regions will have a product API, which is agnostic towards an individual customer's accounts. It'll just be information about what the bank sells. And then it sort of varies. You'll get bill payments. Daniel mentioned insurance. So in places that have open insurance, you'll get insurance products, insurance history, insurance transactions. And now you're seeing places like Brazil, like others, move into open investments, where you have investment accounts, investment history. And this is where you've started to enter the world of what's known as open finance. Once you move beyond open finance, you get into the world of open data. I mentioned Australia. They've started to introduce APIs that provide telecom information, that provide energy usage data. They've also started to look at things like medical, which is to say health, and other spheres as well. But the core of it is this accounts and transactions. That's what is common to all open banking regimes.
So what are some of the most high risk vulnerabilities when we're talking about opening bank data? Because I assume this could lead to some pretty disastrous consequences, if we don't have strong authentication and strong authorization. I mean, these are risks at the top of OWASP's API security vulnerability lists. Do these play a role in open banking, and how can we start to mitigate them? Daniel, maybe you want to take that one off?
So of course, the broken authentication thing of OWASP is of course a very high vulnerability that it could happen. It's very important in sensitive services like this that you know who you are talking to, both in the client sense or the application sense, but also you have to know that the correct user is currently using your app. So that there's a lot of different types of mitigations that we can go into, but so the financial grade API profiles, the FAPI, explains a lot around that. Helps banks to implement their security in the best way, but that typically is around what application are you talking about. But there's also the authentication part of this, authenticating the user. How do we figure out that the correct user is using your app right now, so I don't accidentally transfer money from Bill's account instead of from mine? So that's something that you always have to have in mind, but it makes it even more important in these cases.
Someone dropped a question into the chat that I think is really relevant here. Any recommendations on the API security for banking APIs, especially for APIs that are consumed by mobile apps? They're wondering, should we be moving away from purely using API keys and starting to mandate OAuth and MTLS for system-to-system API calls? Like what's the next step beyond a API key-driven approach here?
Yeah, so definitely move over to OAuth first and foremost. API keys are not security, but there's a ton of flavors of OAuth, of course, and FAPI helps you guides the way in those different types of specs, because for certain types of applications you need certain type of security. So mutual TLS is one way that you're mentioning in the question there, but and there's an OAuth spec for saying this is how you use an OAuth-based system using mutual TLS. How do you obtain a token? How do you share it with the APIs? For other types of systems that perhaps cannot hold a mutual TLS certificate that you need, there's other specifications like Depop that helps you bind your session to your current device and without having the luxury of a pre-provisioned key to your device, things like that. But yeah, in general, the recommendation is look to FAPI. If you start there, you're in good hands.
Okay, I think this is opening some other room for comments. Jeremiah Lee is asking about GNAP. If you're familiar with this, Daniel, supposedly a successor to OAuth 2.0 that incorporates some of the ideas of FAPI. Any ideas on if that's getting market share, and if so, will it be adopted?
OAuth 2 came out, is it 20 years ago?
Yeah.
GNAP is final since 1 year or two. I'm sure it will be adopted. It's not yet. It's looking great, and it has some very good ideas. So I'm pretty sure it will be adopted quicker than OAuth 2, but we're not there yet.
Interesting. Eyal, I'd love to loop you back on the conversation
Yeah.
here.
I've got ones for Daniel, so
yeah, that's fantastic. Yeah, maybe I'll just let you do that in a second.
Yeah.
But I wanted to ask, since you know all of these global standards, are any of them actually mandating a certain security profile that should be used for securing open banking?
Yeah, that's a great question. So that is somewhat of a moving target. So I mean, the short answer is yes, right? Certainly, the newer ones understand the significance of drawing a distinction between a data standard and a communication protocol. In fact, that was reflected in the final update to Section 1033. So they released their draft version, which was near complete at the end of 2023, and asked the market, I mean the Consumer Financial Protection Bureau, and they asked the market for feedback. They received over 11,000 items of feedback. I'm proud to say me and the team at Ozone API wrote a letter to them that highlighted some of the areas where they could improve. And one of the things we called out was, okay, look, one thing is your data standard, but the other is mandating security, exactly what you're asking. And we included in our letter that more or less what Daniel said, that you should, as much as possible, be mandating the use of a common security protocol, whether that's FAPI1, FAPI2, FAPI1 Advanced. You should make sure it's consistent because, as I said, the whole point of open banking is that you have consistent APIs, and a big part of integrating with an API is making sure that the security is done in a consistent way. The data, frankly, is not the biggest problem. It's the security, the token exchanges. That's where it gets complex. And if that's inconsistent, you have a problem. So we were very happy when the final version of Section 1033 came out. In the definition of developer interface, which is their euphemism for API, they defined it as including both a data standard and a secure communication protocol. As a result, the Financial Data Exchange, who was in January selected as one of the official standard bodies, has been leaning into that and ensuring that as part of their conformance specification, they include explicit security data protocol, communication protocol. And they landed on FAPI1 Advanced with PAR. That was part of the FDX specification already, but now it's going to be part of the compliance requirements for 1033. I should kind of asterisk that by saying FDX is still working on exactly a certification process and so on. So it's very much in flight. Now, Daniel, you can keep me honest, but I believe that X2SA included a mandatory requirement for MTLS. I don't know if they required FAPI explicitly. I think they did. The UK in the latest version does require FAPI. I don't think they went all the way to FAPI 2. But as Daniel described, this is a moving target. There's constantly new approaches to API security coming out. So the folks deciding on the standards have to strike a balance between how much of this do I require? Where do I hit pause and say, this is a spec? Because you can't just, every time a new one comes out, you now mandate the whole ecosystem to move to the new one. You have to sort of pin something to the board and say, okay, I'm good with FAPI1 Advanced. I don't need everybody to go to FAPI2. I don't need everybody to adopt Depop overnight. So there's always that consideration. But the short answer is, yeah, all over the world, you see regimes recognizing the importance of consistent communication protocols, i.e. security, and making sure that is mandated as part of compliance. So Brazil, for example, absolutely required FAPI certification in order to comply. I think Australia as well.
Yeah. It's also interesting since the past years at the OpenID Foundation working group meetings, there's people from government showing up, asking questions, and just trying to steer the specifications in the right direction for them. So it's it's a very good cooperation there. And I think the
Yeah.
OpenID Foundation has done a great job of producing the material for them.
Yeah, I couldn't agree more. I mean, that's the cheat sheet. So I see on the chat, Ravi, who has been asking about this, probably others as well. If you're looking for material on this, look no further than OpenID Foundation. The sort of not such a secret of open banking is, even though the regulations may vary region to region, the data standards vary from region to region, like the scope of the data shared. What is practically universal is use of the OpenID Foundation stack, which is to say OAuth, OIDC, MTLS, which isn't exactly them, but MTLS, FAPI, which is to say FAPI1, FAPI1 Advanced, FAPI2, and some of the other stuff. Oh, nice. Thanks, Bill, in the chat, which have become the foundation of the security for every open banking initiative all over the world. So if you want to learn how open banking security works, you really only have to go to one place, and that's the OpenID Foundation.
Yeah, I agree.
Banking is always transforming itself. Users are interacting with finance in different ways. It used to be you go to a teller, then it became online finance, then it became mobile driven, and now we're thinking into AI agents, voice driven kind of stuff. So do the security profiles change based on like the client that's actually accessing this information? Daniel, I'm curious because I know OAuth flows, this stuff like the back of your hand. Like what are new technology trends? Like how is that affecting how we secure all of this?
So it's not changing a whole lot because you still the idea of building a secure API platform is that it's secure for the future, right? You're securing for the unknown. But one thing that changed in the OpenID world is the attacker model has been changing. So in FAPI2, there's a document called the attacker model where they describe a little bit how your OAuth environment could be attacked potentially. And with having that attacker model, we also can reference it in other documents saying we're doing this because of the attacker model. Just referencing the document, making sure that we cover all the holes. So of course that part had changed because attackers are clever, but also new threats emerge with different new technology. So yeah, we see new AI agents popping up. We see all of those implementations using that type of technology, but the base stack remains not the same, I wouldn't say, because it's also evolving, but the idea of it is still the same.
Yeah. What Eyal he laid it out great, I thought. But just from your perspective, what does that open standards based stack look like to you for securing open finance? Anything else you would add?
I think the only one we didn't mention is SIBA,
Okay.
for back channel. But yeah, I mean, here's one for you, Daniel. So let's, folks tuned in, they want security things. So I'm not a security expert. Daniel for sure knows more about this in detail than I do. But some stuff that I think will help, and keep me honest here, Daniel. So first of all, client ID and secrets, like, no, don't do it, right? FAPI explicitly forbids it. It's absolutely susceptible to man-in-the-middle attacks. If you're doing just like HTTPS with client ID and secret, because that's historically what a lot of banks did, stop. That is not going to work for open banking. The question is, where do you go from there? So MTLS, that's a great place to start. You're securing both ends of the connection, mutual TLS. FAPI, you introduce a tightened up security profile. It's basically a tightened up security profile for OIDC. Right, Daniel? Is that about right?
Yeah, it's a good expression. Yeah.
And then once you get to FAPI2, you introduce things like access token binding, rich authorization requests, if memory serves, and the other thing was like, MTLS is a requirement. Like it's not an optional thing, like it was in FAPI 1. I think FAPI or FAPI1 Advanced, I think, introduces.
It's other way around, right? Because in FAPI1 they require utility-less. In FAPI2 it's optional, but you have to do asymmetric key crypto instead. If you
See,
don't
that's
do
why I'm
MPLS.
asking. That's why I'm asking the expert.
Oh, yeah,
So, and then the other one somebody asked me is, are Depop and FAPI, like, are they mutually exclusive? Do they work together? Does one replace the other?
Depop is just a token binding method. So making sure that the party that received the token is the only one who can use it. So normal OAuth tokens, they are like cash. If you find it on the street, you can use it. So to make it into a PIN card so that you can present it and you have to use your PIN to be able to use it, you can use either mutual TLS and bind it to the certificate that the client is currently using, or use Depop, which is a similar method, but you're not necessarily using certificates. You can use just straight up ephemeral keys.
So
But
FAPI, oh, please.
no, FAPI talks about Depop, but it's optional. So you can use it, but it's not something that they say you have to use it.
So
But you
Depop
need,
replaces MTLS as an alternative way of doing token binding, but you're using token binding so you don't have to authenticate both ends of the connection. But you're still using a FAPI security profile, even if you're using Depop.
yes. So Depop only talks about the layer when the token is used. So FAPI mostly focuses on the layer before. How do you get the token? So where the protocols used to secure the connection between the client and the banking server.
So the one aspect that we didn't really talk about is probably worth touching on is client registration. So you've seen DCR, dynamic client registration, emerge in the early days of open banking. What is DCR? And then later, more recently, you've heard about federation. So what's DCR and what's federation?
Yeah, so DCR, it's basically an API for registering your client. So it's a basic REST API where I can post my client configuration, things like redirect URI. These are my keys that I'm going to use. I'm going to have to ask for these scopes, things like that. Posting that to the server, and the server gives them back a secret and says, here, yeah, keep using it. So it's very simple like that. And it's used in the open banking movements to have those automatic registrations between multiple parties. So in Europe, in the PSD2, we have a central certificate authority that allows TPPs, third-party providers that are connected to TPP to get the certificate that they can use to these DCR endpoints all over the different types of banks. Pretty good and very simple to use. Problem is that you have to actually register at each entity that you want to access. But lately, as you mentioned, the OpenID Federation spec has been talked about a lot. So an OpenID Federation is basically a spec for a party to connect, for parties to connect to each other and share information across domains. And they specify mechanisms to do that without registration. So if I have that ADA certificate that I have in PSD2, I can sign a metadata statement on my application and reference that when I'm connecting to a new bank that I haven't talked to before, and they can go check, are they really a trusted provider in the PSD2? So making that registration process a bit easier, or taking it out actually.
Yeah, and then you can use a single registration to just sort of access everybody instead of having to register your client with individual providers, right?
Yeah, exactly. So it makes it easier to handle for all parties. Yeah. But DCR is still very much used, and the federation spec is not really done. I expect it to be done any day soon, but it's starting to be used. I know it's in Italy, they already use it. They're talking about using it in Brazil, so it's getting some traction.
Yeah, yeah, I'm seeing it out there too. And then the other one I had was which I think will help out our audience is in Europe it's all EIDAS based certs and stuff. And in the UK, I worked for Radium. They took a different approach. It's basically a central RA that is run by the registrar that issues certs. Any thoughts on kind of EIDAS versus uh, oh, thanks, Chris. Yeah, Chris Wood, my colleague from Ozone API, just pointed out that Federation is going live in the UAE, thanks to him and our team at Ozone API.
Great.
But back to the whole EIDAS versus the approach of a central trust authority. What are your thoughts on that?
Well, the the EIDAS is sort of a central trust authority as well, even though it's spread out, it's still managed more or less as one. But since there are many different issuers, it's less brittle. There's not a single point of failure. So if you're having just the single point, I would say. But from a technical point of view, it's just this PKI. You need to trust a specific certificate or an intermediate of certificate or something like that. So don't have much of an opinion, I must admit. The PKIs in general are great, and they might be hard to handle sometimes, but what you get from them is the kicker.
Awesome. Eyal, you're taking over my job, and
Yeah, sorry, I'm just glad to have
no, no,
Daniel here.
it's great because this is technical stuff and it's a little bit beyond my head too. So I really appreciate it actually. Um, I want to kind of round the whole security conversation off with like any other best practices we should be leaving listeners with on securing open banking. Eyal, do you want to start with that perhaps?
Oh, like I said, OpenID Foundation is the place to go. You solve a lot of problems just by keeping up with their specifications and making sure you understand what they're doing, and that'll help you really get ready for open banking in any other region. More specific than that, I'll pass it on to Daniel.
Yeah, and I think I just agree on that because the OpenID Foundation really has a good grasp on what we need to be doing. So following that work is a very good practice. And of course, there are other security measures that you have to take outside of it, like your website security that is not covered by FAPI, but that's something that should look into OWASP or something like that. But for the general API security, identity, information security, then OpenID Foundation is the key.
Um, Ravi Kumar is asking a more forward-looking question related to regulation, especially in the U.S. You know, we have a new administration. He's shaking things up. The head of Consumer Financial Protection Bureau was just fired. I think a lot of people are worried about the longevity of this great new 1033 initiative. You know, Eyal, any thoughts for Ravi
Yeah.
Kumar on where you might see this heading?
Yeah, it's a great question. I mean, this is my life every day is trying to keep up with what's happening with Section 1033. So let me start by saying that open banking is broadly bipartisan. Okay, it is broadly bipartisan everywhere. There are good arguments for why left-leaning folks might want it that have to do with financial inclusion and fair playing field and avoiding monopolies. And there are people who are more right-leaning, good reasons for them to want it in terms of competition and enabling fintechs and driving down costs and just essentially having a strong economy and a strong kind of capitalist engine. So that is no less true in the United States. Open banking, including Section 1033, is broadly considered a bipartisan issue. Now, that doesn't mean that some new director of the CFPB isn't going to come in and put their stamp on it and so on. However, based on the folks that I speak to, it is unlikely that Section 1033 is going to be eliminated entirely. Frankly, even if Elon Musk gets his wish and the U.S. deletes the CFPB, if you keep up with his tweets, it is likely that Section 1033 will simply be moved under the authority of a different institution. I mean, even if you are of the mind that they're trying to deregulate everything and drive kind of this completely different approach to this stuff, Elon Musk just started X Money in partnership with Visa. A lot of the friends of the Trump administration are big tech and tech leaders. They want Silicon Valley to succeed. It doesn't take much to realize why open banking is good for that crowd, right? The ability for fintechs to be able to get data from banks and create new financial tools, that's going to create more opportunity for tech, not less. So I think Section 1033 ultimately is safe. However, there currently isn't a director at the CFPB. There's an interim director. They have been ordered to put their pens down. So it is rather up in the air in terms of what aspects of 1033 are going to be enforced and whether the current timeline that they've put forth is going to be the final timeline. The Trump administration is still very new, so we don't quite know what they're going to do with the CFPB or Section 1033. But I, for one, am confident that it is going to remain as a regulation, and it is going to come into force. It's also worth mentioning that FDX, the financial data exchange in the U.S., grew to, well, I think there are over 100 million records shared now using the FDX specification without any enforced regulation. So even if something happens to Section 1033, open banking in the U.S. is going to continue to spread and grow and evolve. So I don't think there's any reason to doubt that. The fact is it has come this far over the course of the last 6 years without a regulatory push. And this comes back to the point I made earlier that you can get to common, open, shared standards through market forces and through regulatory forces. The U.S. has taken a largely market-driven course so far. If they have to revert back to that market-driven course, then they will do so.
Yeah, it kind of brings into the question the enforceability of all of this. You know,
Yeah.
are these regulations actually enforced? Have we seen precedent of that throughout the EU or regions that have a long history of open banking? Eyal?
Yeah, enforcement is tough, especially when you have a moving target on what they've done. It's a good question, Bill. I confess to my knowledge, I don't know of any, such and such bank was taken to court, such and such bank was heavily fined
Right.
because their APIs were no good. That there's certainly lots of monitoring and lots of
Like you have bad developer experience.
yeah, you have bad DX. You have a bad API. It's down all the time. But I don't know of any big fines that were handed out. I will say Canada, and we're not enforcing anything, but they certainly, as part of the early legislation, laid out some very hefty fines up to the $10 million mark for organizations that misrepresent their participation in the ecosystem.
Oh, wow. Okay.
But it's still a draft legislation, so we'll see if they actually hand out those kind of fines.
We do see government intervening with breaches, though, and I feel like that's definitely relevant to sensitive data control.
Yeah. And in Europe, we've seen fines for GDPR misuse, though. But
yes,
I don't think we've seen open banking yet, but at least that type of legislation have been enforced. So that speaks good for other legislations, I think.
Fascinating. Okay, well, we've covered a lot of ground here. We've answered all the questions we had in the chat, I believe. Okay, wait, one more from Elizabeth. Thanks for sharing your insights. What role do you see technical hubs like Tink and Eyal will play in open finance? Will they expand beyond banking, and will new hubs emerge for other areas? Maybe just take that one.
Yeah, so Tink, Aiden, in the US you've got Plaid and those guys. All these guys, hub is a generous word. I think something closer to a hub would be like what Switzerland is doing. Those I would classify more as aggregators. And they're not going anywhere because you need that function. In other words, if I'm a third party and I want to get data from 1,000 banks, I want a single API to call that's going to fan out to 1,000 banks. So that's a valid requirement a valid kind of solution to fill. But what you've seen happen in Europe is fascinating. You basically see the commoditization of connectivity, where the cost of hooking into 1,000 banks drastically drops because everyone's running the same API. So you don't have to build this huge infrastructure to connect to bespoke to 1,000 banks. They're all the same. So you just create something that can essentially pivot between the endpoints and can do it very, very easily. So you'll get a lot more aggregators that provide the same capability at a much lower cost, driving the cost of that down. And those aggregators will be forced to compete on other aspects, whether that's intelligence, normalization, insights is a word you'll hear in that space a lot. And now with AI, probably even fancier stuff that they're going to do once they have access to that data. So it's a valid function, but what you're going to see is the connectivity part, the go and get the data from lots of places. That's going to become commoditized, and it's going to be a race to zero.
What about security for all of this? How do we secure the APIs and the related data all the way from API production via these aggregators to the end consumer consuming them, is what Elizabeth's also asking here. Daniel, any thoughts there? Can we trust these entities?
That's the hard part, right? Making sure that the ones that are connecting to my aggregator are something that we trust. So I'm thinking LEO will have to do their homework and do their FAPI implementation just as good as the banks that they're connecting to are, to make sure that the data doesn't leak and the data is still private after we leave it for the aggregators.
Well, Jeremiah dreams of a future where we don't need an aggregator. So maybe that's in the cards as well.
Yeah. Well, like I said, because the cost drops to zero, what you're seeing in a lot of regions is, and this is at the heart of open banking, even though aggregator is a valid function, open banking means the individual banks have their own APIs. So if you want to connect to them directly, that's going to be easier and faster than ever. So if you have a select few banks you're trying to connect to, right, you won't need an aggregator. Just go ahead and connect to them.
Yeah, that would be nice. So I have a similar dream as Jeremiah. I want to connect to my banks myself in my own app, but I have to be approved by EIDAS to be able to do that currently. So I think maybe Jeremiah shares my dream, but just being able to hack away with my own data at the different banks, that would be fantastic.
But how do I trust you?
Yeah.
Can you trust yourself?
Yeah.
That's funny. Yeah, because it all hinges on the application and approval process. It's not like end consumers can directly access this information. It's usually through a third-party provider. So the whole dream of like a true open financial economy is like almost kind of there, but maybe not quite.
Yeah. How skinny can a TPP get, right?
Yeah, right.
Yeah.
A family. I don't know.
Yeah.
All right, guys. I think we'll wrap things up there. Thank you so much. I really like this discussion. We had some great input from both of our panelists as well as everyone here on the call asking questions. Definitely follow Nordic APIs for some of this content. We're covering open banking and open finance from many different angles if you enjoyed this. And stick around for more. We've got the Platform Summit coming up in the fall, and we're definitely planning on attacking this theme and other related areas at that event. So thanks so much, Daniel. Thank you so much, Eyal. Great insights all around. Appreciate you.
Thanks a lot.
Thank you.
I learned a lot. It's great.
Yeah, likewise. Thanks, Bill.
Fantastic. We'll talk soon.
Bye.